Good afternoon, everyone. How are we doing? Good? I must admit, I have an interesting challenge because I'm going to talk to you for the next about 20 odd minutes while the Ghana-Korea game is on the way. So I'm wondering how focused or interested you will be. What I'm keen on seeing is whether there'll be screams of joy or desperation at some point with the multitaskers that are in the room at the moment, whether because a goal is scored or the referee has so often make the wrong call, even with VAR as an instrument to help them make the right decision. So as Kessia has highlighted, my name is Patrick Domingos Tembwa, and I work for a UK-based organization called Reall. And the reason why I'm here is to talk to you about our experience and the way we've been looking at some of the climate-smart homes and how financial instrument can help sort of fast forward those. And what I'm keen on doing over the next 20 minutes or so is really first to look at our experience as Reall and what we've done through the years, our impact. And then second, look at the financial instrument per se and what it has done, what it can do to scale some of the operations that we have in the markets where we operate. So just checking that it's all working fine. Okay, so that's me there. Yeah. So just go slightly back. We'll get there in the end, don't worry. Oops. Is that me? Yeah. Yeah, no, you're right. Is it back? Forward? That's not mine?
I think they were streamed. You need to go backwards.
Oh, okay, so that's me.
Further, more back.
We'll get there, sorry, apologies. Okay, so that's us there.
There you go.
Okay, so I have to go this, okay. Yeah, sorry. So this way. Oh, sorry. Something is not quite, yeah. Don't worry, we'll get there in the end, and by that time, Ghana would have scored. Sorry? Oh, no, it's just, I'm trying to see, no, I'm trying to see which, so, yeah, so here, and then how do I go forward? Yeah. Okay. Forward. Okay, that's good. Yeah, that's fine, yeah. Oof. So, before I go into my presentation, as you can see, it's been going forward and backwards. I just really want to highlight 3 key points which I feel you need to have in the background to sort of understand what we do and the importance of financial instruments in that setup. So the first point is climate change, and some of the contributors here, including Professor Al-Zafarini, have mentioned that, the fact that it's here, the fact that it's been having a significant impact in a lot of the country in the world, particularly where we operate, including Pakistan and Nigeria. So that's the first point. The second point that we need to bear in mind, and which is quite important is urbanization. And Kesia Ross here mentioned earlier the fact that in some of the countries in Africa, the annual growth rate is about 5%. And you just have that trend of people in rural areas moving into the urban ones, and the impact that will have on, or already has on infrastructure, be it the larger one, social infrastructure, like water and sanitation systems, but also housing. And that's probably the third important point, the housing gap that exists in a lot of the African markets. So in countries like Kenya, we're talking of over 2 million houses that are needed, and that number is growing. And in Nigeria, its numbers are fairly similar as well. And the reason why I'm giving you that information is just for you to keep that in the background and sort of consider the, have that in mind as I'm outlining the work we do, and also the role that financial instrument can play in this. So, Reall, I'm sure a number of you have never heard of that name, and I'm sure some of you are also struggling to pronounce it, be it Reall or Reall. So, Reall has been around now for just over 30 years, and in terms of the experience and impact that we've had over the years, you can see some of the numbers there. I will insist on the number about investments. And over a 30-year period, you might consider that actually it's not that significant. I think the two important points that I want to highlight here, one is the fact that we have been supporting developers in those markets to roll out a housing scheme. And then the second piece is our operating model, which is really about putting money on the ground in local currency so that it can deliver the units that are needed in those markets. And that's very at the core of what we do as an organization, i.e. being an innovator and investor in green affordable housing in Africa and Asia. So in terms of what we've been doing since 2021, we've sort of recognized the importance of a green element in everything we do. And looking at the potential investments that we make, this is one of the critical criteria that we look at, making sure that the project that we are wanting to invest in has got the right green credentials. And probably for some of you who were here before, I'm sure you all know where that picture has been taken, which country. And if you want a clue, they are playing at the moment at the World Cup. Which country? Nice one. Try again. Yeah, that's Ghana, and it was shown here earlier by Tilda Mwai in her presentation. So in terms of what that particular project has achieved, you can see some of the numbers there. So it has been certified Edge Basic, and some of the savings in terms of energy and water can be seen there. We have a sort of similar project in Nigeria, which has actually achieved even a higher certification around Edge Advanced. And again, in terms of the energy efficiency and water savings that have been achieved by the project can be seen there. Again, the key part here is to identify the fact that in some instances, it's not necessarily the most sophisticated approach to a housing scheme that will get you to the better outcome. Ideally, you want this to happen, but at times you feel that there are constraints in the markets that don't necessarily allow you to do that. So again, insisting on the fact that we as an organization, focus is green, focus is affordable, and the key piece being that actually our portfolio has shown that you can have both and not necessarily having that perception that you cannot do one with the other. So the key thing that I want to highlight, so I mentioned the fact that in our portfolio we have invested and have proven that actually affordable and green are a combination that work quite well when it's done. What we've noticed over the years is the need to be approaching markets from the two sides of the equation, so to speak, and recognizing that you can work on the supply side, but actually it doesn't necessarily solve the issue on the demand. And hence our willingness to push for some financial instruments that get us to that point. And that slide here is just to highlight the sort of challenges that the affordable housing segment has been having, and our experience has shown. So on the supply side, the fact that banks are not necessarily willing to lend to developers, and one of the reasons being simply what we've seen across a number of markets, i.e., why would a bank provide you with a loan, say at 12%, where they can get exactly the same amount of money at the same rate from and risk-free for government. So therefore, this restricts the construction finance amount that might be available. The other piece, and I'm sure a number of the developers that are here will mention that, the fact that banks are very much concerned about the exit that is available in each one of the projects, and in a way, stopping short of funding you unless there is a clear understanding of what your exit solutions are. So that's some of the constraints that we've seen over the years in the way our partners operate. And then if we look on the demand side, I'm sure you are all aware of if not, I'll highlight some of them. You're aware of the numbers that are out there in terms of residential mortgages in some of the markets. I think in Kenya it's just about 30,000 of outstanding residential mortgage stock. In Nigeria it's far less than that, and that again is a significant blocker in terms of the entire ecosystem, and hence the need of a financial instrument that can support that ecosystem and make sure that it functions in the most appropriate way. So based on that, based on our experience, and based on analysis that we've undertaken in a lot of our markets, we have worked with the Global Innovation Lab for Climate Finance to develop a financial instrument that can cater for both sides of the ecosystem, recognizing that actually you need some incentives. You need to be pushing these two sides at the same time to get to the best outcome possible in a lot of those markets. That's when I stop for a couple of minutes, and I'll be sharing, be watching a video now before I give you a bit more details on the financial instrument that we've developed. Yeah.
300 million new homes are needed by 2030 to keep up with demand from rapid urbanization. At the same time, the built environment already contributes 37% of global emissions. Green construction is critical to mitigate the effects of climate change. But a lack of market confidence across Africa and Asia severely restricts the supply of both construction and end-user finance.
We've got to fix the housing crisis, we've got to do it in a green way, and that means unlocking a finance solution.
Green affordable housing finance is being developed to provide an answer. The instrument bridges financial barriers for local lenders and housing developers, de-risking investment and incentivizing a greener approach. The instrument is underpinned by two mechanisms. First, the Enabling Environment Facility identifies, supports and builds the capacity of developers to deliver green, affordable housing. Technical assistance is also provided to local financial institutions to introduce machine learning software that accurately assesses informal and low-income earners for mortgages. Alongside this, the Guarantee Facility mobilizes local finance by extending guarantees to local lenders, de-risking construction and mortgage loans. Together, the two mechanisms foster a self-sustaining, locally driven housing finance ecosystem that can function without dependence on public financiers.
We know that people on low incomes are reliable repayers of finance, but the banks are quite conservative, or they haven't been shown that they can de-risk this investment.
Reall will pilot the idea in Kenya, where there's a shortage of 2 million homes and home ownership is as low as 21%. The launch will adopt technology from the alternative credit assessor Sintellect, which has already delivered 14,000 mortgages to unbanked households in India, and utilise IFC's green certification process for homes, EDGE. Once proven in Kenya, the instrument will be ready to move into other markets, boosting available capital for green developers and expanding home ownership into an untapped market.
So, how does the instrument work? And before I get to that, and you heard some of the numbers in the video there, is to insist on our role as an organization. So, our role as Reall, UK-based, it's not about dominating markets. It's very much about how we can support, enable a market to function in the most efficient way. And that means at time being able to make some particular intervention. And this instrument, as it's been described in the video, is really part of our DNA as an organization that makes sure that we can push the innovation, commit the funding so that it kickstart a market that can scale and can be commercially viable. So a key element of what we do as an organization. And having looked at the video, the two elements that I would like you to take away are these two pieces around the supply side and the demand side. And on the supply side, it was mentioned in the video and reiterating it now, the Enabling Environment Facility, which is really about how you provide a pipeline of project that can be absorbed on the demand side. Also how you work with developers around the green element of their work, and how you work with developers so that some of the credit assessment that's not there in the markets, some of the way of approaching markets, approaching people who are in the informal market are available, so that a bank is much more comfortable when it comes to making a decision on a residential mortgage. So that's on the supply side. So on the demand side, and referencing some of the points that I made earlier about the sort of lack of incentives for financial institutions to get in there, provide the financing that it can, so that markets become self-sustaining. There are two elements to the way we are wanting to approach it. One is on the construction guarantee, where actually banks are much more comfortable to provide some level of funding to developers so they can build units and hence increase the level of supply that's available in the market. And the second part is on the mortgage. I mentioned some of the numbers. which from my perspective are shocking in terms of the outstanding residential mortgage in the markets. So how do you get to a point where it becomes more of a way of working for banks being more comfortable to provide mortgages? And that means providing the right assessment tools for them. That means also providing some sort of incentive to them so that they're comfortable taking on providing mortgages to end beneficiary. I have to admit that in some markets, and Nigeria is one of them, there are some cultural barriers in terms of people taking on mortgages, but that's just, in a way, one element of the issue, and the core one being the fact that the banks or financial institutions are not necessarily getting into those markets and providing the financing that is needed to end beneficiary. Now, I mentioned the fact that a key part of our DNA is not to dominate market, but on the contrary, to try to initiate some initiative that kickstart a proper functioning of the markets. And what I'm wanting to highlight here is some of the other financial instruments that were developed. ACON was in Kenya, Sustainable Affordable Housing Finance Facility in South Africa, and then the Credit Guarantee Scheme in Pakistan. And the key element here is really to insist on the fact that the way you structure your financial instrument can be conducive to a better environment in terms of funding housing schemes that are rolled out in a particular market. And ACON is a very good example of that, where they actually did manage to structure a green bond specifically for a part of the real estate markets, student accommodation, with a population that keeps on growing over the years. Now, I've mentioned Kenya a number of times, and I'm sure Kenyans in the house are very proud of it. So what we aim to do is to pilot that green affordable housing finance in Kenya over the next five years. And in terms of what we will aim to achieve there, it's deliver homes for just under 11,000 11,000 people. And again, in terms of the green elements of it, you can see some of the benefits there in terms of the water savings, embodied energy emission, and also energy consumption. And the key for us in terms of that particular market is the fact that, as Tilda Mwai mentioned earlier, it is a market that is very conducive to how you can implement that sort of instrument over time, and hoping that it will run smoothly. So again, slides worth looking at, reflecting on. We have been talking to a number of potential partners on that particular initiative, and these funds are a reflection of these two-sided approach, i.e. on the demand side and also on the supply side. And the key being, you've got a level of funding there that we have been talking to our partners about, but really it's dependent on what the market is willing to do and absorb, and likely a bigger pot of funding is also possible to get to the outcome that we're wanting to achieve. The key points, and again, coming back to that point about And it's not my being humble, but just insisting on our role as an organization, as being an enabler, an organization that aims to push forward initiatives that are innovative and can have a significant impact on the market. We recognize that actually that structure, because of the fact that it addresses both sides of the housing equation, can be replicated and scaled in other markets. We operate in Asia and Africa with some priority markets where we are more active than in others, and that would give us an opportunity to scale and replicate that double approach on the green, affordable housing space. I have to say that it's the opportunity is there, and we definitely have a wealth of experience, be it in terms of data, as Ben mentioned earlier, and in terms of experience to make that transition probably much quicker than maybe the market would want it to be. Well, so thank you all for listening to me. Just one thing before I go away. Our chief executive is here, and if you've got any difficult question, please direct them to him, and I'll just listen in as he tries to answer. One other point that I would like to make is, so there are people back in the UK, particularly Bridget and Chloe, who have helped put together all those slides, and a big thank you to them. Thank you.